All right, everybody, welcome back for another deep dive.
Yeah, welcome back.
This time around, we are going to be diving into the world of financial models.
That's right.
And we got a request from a listener about this one, so this one goes out to you.
Exactly, and this is a good one.
So, we're going to try to make sense of this. And actually,
Yeah.
you sent us a document
He did.
that,
Sort of.
broke down, like, the core components
Yeah, the basics.
of a financial model.
Absolutely.
It listed things like an income statement and a balance sheet,
Right.
a cash flow statement,
Yes.
and all this stuff.
Yeah, and those are really the three big ones.
Yeah.
If you can understand those three,
Right.
you've got a really good basis to understand the financial health of a company.
Okay.
Or, even an individual for that matter.
Yeah. Well, let's jump in and start with the income statement.
Okay.
I mean, it kind of sounds like, a financial report card for a business
Yeah. That's a good way to think about it.
or something.
Yeah, it really is. It's showing
Okay.
how much money a company brought in over a certain period of time.
Okay.
Could be a quarter, could be a year.
Right.
And then it shows all the expenses that went out in that period.
Right.
And then what you have left over is your profit.
So it's just like revenue minus expenses equals profit.
Yeah, exactly. That's the basic equation.
Okay.
And that really can apply to your personal life too.
Right.
How much money did you make?
Yeah.
How much did you spend? What do you have left over?
That's fascinating. I mean,
Yeah.
that's something that a lot of people could benefit from.
Right. And what you're looking for over time is to see, are those profits growing? Are they shrinking?
Okay.
Are they staying the same? Are you making progress or are you not making progress?
Right. So it's not just a snapshot.
We all
It's
have a
like,
trend.
yeah, like
Yeah,
what's
there's-
the trend?
Are you moving in the right direction?
Got it.
Yeah.
Okay, what about the balance sheet?
All right, so the balance sheet.
This one is like
Yeah.
it's like a snapshot
It is a snapshot.
of like what you've got
Yeah.
versus what you owe
At this moment in time.
at any given moment.
Exactly.
Right.
So the balance sheet is broken down into three main categories. You've got your assets,
Okay.
which is what you own.
Mm-hmm.
So think about like your house. If you own a house,
Okay.
that's an asset. Your car,
Right.
any investments you have,
Mm-hmm.
those are all assets.
Okay.
And then you have liabilities, which is what you owe.
All right.
So if you have a mortgage on that house, that's a liability. If you have a car loan,
Okay.
that's a liability. Student loans, credit card debt,
Okay.
anything you owe to somebody else,
Got it.
that's a liability. And then the third component is equity.
Right.
And equity is basically what's left over.
Okay.
So it's assets minus liabilities equals equity. So in the case of your house, if your house is worth $500,000
Okay.
and you have a mortgage for $250,000,
Right.
your equity is $250,000.
Okay.
That's how much of the house you actually own.
Got it. Okay.
Free and clear.
So the cash flow statement. This is
Okay.
the one that I always
This is the one a
I
lot of
saw-
people get tripped up on.
most difficult to
Yeah.
wrap your brain around.
Yeah, because the income statement and the balance sheet, they're dealing with accrual accounting,
Okay.
which means that you're recognizing revenue
Right.
when you earn it,
Okay.
not necessarily when you receive the cash.
Right.
And you're recognizing expenses when you incur them,
Okay.
not necessarily when you pay the cash.
Right.
The cash flow statement is all about the actual cash
Okay.
that's coming in and going out of the business.
So it's not just like a promise to pay
Right.
or a promise of income.
It's the actual dollars.
It's the real deal.
Yeah.
Okay.
So it shows you where the cash is coming from and where it's going.
Got it.
And this is really important because a company can be profitable on paper,
Right.
but if they don't have enough cash to pay their bills,
Ah,
they're going to go out of business.
right.
So cash flow is really the lifeblood of any business.
So for somebody like me who is not a finance expert,
Yeah.
how can I look at, a cash flow statement and see, if this is a healthy business or not?
So there are a few key things you can look for. One is the overall trend in cash flow. Is it positive?
Okay.
Is it growing? Is it shrinking? That's one of the big things you want to look at. Another thing you can look at is the breakdown of cash flow
Okay.
into its three main categories.
Okay.
Cash flow from operations,
Okay.
cash flow from investing activities,
Okay.
and cash flow from financing activities.
Okay.
Cash flow from operations is basically the cash that's generated from the day-to-day running of the business.
Okay.
Cash flow from investing activities is the cash that's used to buy or sell long-term assets, like property, plant, and equipment.
Mm-hmm.
And then cash flow from financing activities is the cash that's used to raise capital or pay down debt.
Okay.
So you want to look at each of those categories and see, are they healthy? Are they sustainable?
Now, the source that you sent us mentioned this thing called assumptions in a financial model.
Yeah.
So we like building this entire thing on
Yeah.
top of just like a guess?
Yeah.
What's
That's a great question.
go on here?
Because assumptions are essentially educated guesses about the future.
Okay.
So you're right. We are building these models on top of assumptions, but the key is to make sure that those assumptions are realistic
Okay.
and well supported.
Okay. How do we do that?
So you want to base your assumptions on historical data,
Okay.
industry trends, market research,
Yeah.
and, any other information that you can gather
Right.
to give you a reasonable basis for those assumptions.
Now, what if the assumptions are wrong?
Well, that's where sensitivity analysis and scenario analysis come in. So sensitivity analysis is basically a way of testing how sensitive your model is to changes in those assumptions.
So we just like
Yeah, so you basically
poke it and prod it.
you tweak the assumptions a little bit
Yeah. And see what happens.
and see what happens to the output of the model.
Okay.
So for example, let's say you're assuming a 10% growth rate in revenue. You might run a sensitivity analysis where you test what happens if the growth rate is only 5%,
Okay.
or what happens if it's 15%.
I see.
And that'll give you a sense of how much that assumption really matters.
So if the model just totally falls apart, if
Exactly.
it's 5% or 15%, that would
That's a red flag.
tell you something.
No, it tells you that that assumption is really critical
Okay.
to the outcome of the model.
And then scenario analysis.
Yeah, so scenario analysis is similar.
Okay.
But instead of just tweaking one assumption at a time,
Right.
you create a whole set of different assumptions that
Right.
represent different possible futures. So for example, you might have a base case scenario,
Okay.
which is your most likely scenario.
Right.
You might have a best case scenario,
Okay.
and you might have a worst case scenario.
Interesting.
And you run the model under each of those scenarios
Okay.
to see what the range of possible outcomes could be.
So this is all giving me like
Yeah.
a whole new perspective on how to look at
Good.
businesses
Yeah.
and, potential investments and stuff.
Absolutely. And remember, this stuff isn't just for like Wall Street analysts.
Oh.
You can use these same concepts
Yeah.
in your personal life.
Yeah.
Like when you're creating a budget. Well, you're essentially building a financial model
Right.
for your own household.
Yeah.
You're projecting your income, you're projecting your expenses,
Yeah.
and you're trying to make sure that you have enough cash flow.
To cover everything.
Exactly.
Yeah.
And you can even use sensitivity analysis
Yep.
and scenario analysis
Yep.
to test your budget.
That's amazing. I never thought of it that way.
You can see what happens if you lose your job,
Oh, wow.
or what happens if you have an unexpected medical expense.
So you can actually build a financial model
Exactly.
that's like
to prepare for the
stress testing your life.
Yeah.
Exactly.
Wow. This is a lot to think about.
Yeah, it is. So,
Yes.
but it's powerful stuff.
It is.
Yeah.
We started out with those three core statements.
Yeah. Income statement, balance sheet, cash flow statement,
And now I've got these tools of sensitivity analysis. And
scenario analysis.
Yeah.
Really powerful stuff.
it's like we've unlocked some secret code
Yeah.
for understanding like
The matrix.
the financial world.
Yeah.
All right. Well, you've given us a lot to think about.
I hope so.
I hope all of our listeners out there
Yeah.
are going to go out there and put this knowledge to good use.
Absolutely. And keep the questions coming. Yeah. If you want us to do a deep dive into,
Yeah, we'd love
something else
to hear from you.
that, is interesting to you,
Yeah.
just let us know and we'll add it to the list.
Absolutely.
All right.
Thanks for listening, everybody.
Thanks for joining us.
Till next time.
We'll see you next time.
Bye.
Bye.